Hello and welcome to KYC, that's Know Your Company. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and focus on that one company that you need to have your eye on. It's a recent listing, TrueAlt Bioenergy as well, and it's an interesting one because, not too much coverage in terms of analysts, but the space that it operates in terms of ethanol as well as the other key factors that the company might go into very soon, and we'll talk about that very, very quickly. But in terms of this particular very, very interesting stock, there are a lot of things to talk about. Now, EBITDA expansion is one of them. There are also multiple key expansions that the company is doing in compressed biogas, amongst others, that could be a key growth driver into the next 3 to 5 years. Now, ethanol as well as new verticals like CBG, as I spoke about, as well as SAF, are some of the ones that the company is expected to be a key beneficiary of with what we've seen currently as well. Now, apart from that, the company's deleveraging roadmap continues to be one of the major things that we talk about because the debt has increased going into FY25 until that time. Now, since they have one of the key factors looked at reduction of debt in this IPO, we'll continue to focus on that with the management. Now, strategic joint ventures as well as newer partnerships, what could be those as well, because the company has struck an important partnership as well. And this will be something that we ask them as well. But largely, these are all the factors that we're looking at for TrueAlt Energy as well. When you move on and look at the other key factors about this particular company, since listing, it has had a difficult time, to say the least, because there have been some challenges, and we'll put focus on that in just a bit. But the company is engaged in the production of biofuels, with ethanol being one of the biggest factors in terms of the company's growth. Now, we've seen the revenue jump up quite a bit, but the primary focus is on this particular sector, and hence, given the national policies that we've seen, especially on the E20 as well for automotive sector, ethanol becomes a key growth driver, and TrueAlt, a key growth beneficiary, is something that we look at. The company is one of the largest producers of ethanol in India. Apart from that as well, we continue to monitor the newer spaces that they are going into as well. So compressed biogas is something that we look at, but for ethanol specifically, the installed capacity currently at 2,000 kiloliters per day. It becomes one of the highest ones in this space, and hence a lot more to focus and talk to the management on about all of this. Now, largely, of course, we will be speaking to Mr. Vijay Narani. He is the managing director of TrueAlt Bioenergy, and hence now a good time to talk about what will be some of the factors that we will be watching out for. Now, largely, income statement, balance sheet, cash flow, and if you are a regular viewer, you know this drill by now, and return ratios will be something we'll focus on. Also get you a focus on the shareholding structure, street cred, and unfortunately not very positive on this. Valuation as well as outlook are some of the key factors that we look at for the company at this point of time. But let's start with the income statement now. We spoke about the listing. It's not been too long since the company listed, just the last few months. But revenue accretion has been very, very strong for the company. Jumped from 762 crores all the way to 1900 crores. The EBITDA has also kept pace with, growing almost 3x to 309 crores. And profits subsequently have grown from 35 crores to 446 crores. When you also look at the Q3 performance, largely a very strong revenue base, but here you see the concerns. Now, EBITDA hasn't kept pace with the revenue in Q3 of FY26, and hence margins have slipped materially from 30% to 18.8%, while the profits have also dipped, and hence we've given this a neutral rating for now. While the history suggests that the growth momentum should continue, Q3 and the latest quarter shows you some concern, and hence we'll come to that in just a bit. The margin trajectory very visible in terms of the upward momentum, but Q3 should have seen a much higher accretion in that sense. So continue to monitor that and ask the management on the same as well. When you look at the balance sheet as well, let's look at this perspective very quickly, because you've seen that the cash level has been something that the company has been targeting to increase as others as well. So from 23 crores, there's been a 10x jump in cash as well, but the borrowing number has been stable at roughly around 1,500 crores. So what could be the deleveraging strategy will be something that we'll ask the management. The company's book value as a whole has grown by 7x, given by new capacity that has come in. So you've seen the revenue jump 7x. You've seen the book value also keep pace with that at this point of time as well. So that's largely on balance sheet. In terms of the book value, while positive, the borrowing number is something that we continue to focus on, and concerns on deleveraging is something that we'll talk about. So hence a neutral rating yet again. But on cash flow, that's the other key aspect. Now, because of the profits that I've generated, that's clearly visible in the company's cash flow from operations as well. So it had that blip in FY24, big jump in FY25 yet again, with a profit of also around 146 crores in FY25, shows you that ratio of almost 200% on a steady state basis. Will this continue? Will be something that we'll talk to them about. Net cash flow has also materially jumped. So clearly a thumbs up from this standpoint for this KYC rating as well. Return ratios is the other key aspect. Now, in FY23, the company's return ratios were around 27 odd percent. That jumped to 28.2%. So hence, the return of equity is largely a big thumbs up from this standpoint as well. And hence, given this a thumbs up clearly. Shareholding largely stable at 70.5% as well from the management, because we've seen that there was, of course, the selling in this particular IPO, and hence the shareholding has come to 70.55%, very, very stable in that sense. But you see that there has been not too many foreign investors who bought into this story as of yet. Maybe a key domestic play, but the domestic institutional investor share also limited, and maybe because the promoter hasn't sold too much in this particular IPO, is something that we continue to monitor, because the stock is down 25%, and hence public, the retail investors like you and me have bought into this counter right now. But largely something that we continue to monitor, and hence a neutral rating for now on the shareholding as well. The street cred is what I was talking about. Not too much since the company listed, not too much time that has passed, but stocks down up almost 3% in terms of the 1 month performance. But since listing, the stock's down almost 25%, and hence there's not too much in terms of for us to talk about in terms of the street cred at this point of time. Valuations become key at this point of time for the company as well. Now, it has peers like Balrampur as well as Triveni Engineering amongst others. So for all the three companies, you do see the valuation largely stable at the 22 to 26 times price to earnings. And hence, we've given the company a thumbs up on this aspect, because while there has been a 25% drop in the company's share price since listing, now at this point of time with peers and a higher growth, this becomes a very interesting counter, is what True Alt Energy is. In terms of outlook as well as the final key parameter is what we track. The company has specifically mentioned in terms of outlook that there are some key things to watch out for. Ethanol business, largely a very steady business. So you will see the all plants of the company are running at a steady state pace, and there will be no new capacity addition. So you should see return ratios improve from this point on as well. When you also look at the other key aspect, which is the compressed biogas, now that will drive the company's growth outlook going forward, and hence you should see those newer plants that are coming in be a next growth opportunity for the company. Apart from that, SAF is a big long-term project for the company. Returns will come later, so you might see that the benefit coming in from the ethanol business might be diluted at this point of time from SAF, but the share of ethanol should continue to boost the company's parameters. Fuel retail, very small business on a day-to-day basis, but expanding at a steady pace as well. So hence, largely is what we see, and profits should improve as plants run smoothly. Time now for the final ratings of what we give it in terms of the KYC. Neutral rating for both income statement and balance sheet, while cash flow and return ratios continue to show that positive momentum. In terms of the shareholding, that's largely stable and neutral in that sense at 70% shareholding from promoters, but lesser in terms of the foreign investors, and hence a neutral rating there. But valuation and outlook, the two big factors that we focus here on KYC, seems to be a thumbs up from that standpoint as well. So overall, we're giving the company a 5.5 out of 8 for KYC's stringent parameters in this show as well. But largely, let me welcome in the guest for today, Vijay Nirani. He's the Managing Director of True Alt Bioenergy at this point of time. Mr. Nirani, very good morning, sir, and thanks so much for joining in today. Largely, let me start off with, for quarter 3 specifically, because we did see that the margins came down in this particular quarter and the profits were impacted on a YY basis, while the revenue has kept pace with the growth. Could you give us some perspective of where do you see ending in FY26, both in terms of margins as well as in terms of profits? If you can give us some perspective of what investors should expect at this point of time.
No, At the outset, thank you so much for having us and for covering us. We are relatively a very young company, like you said. We just have about 2.5, close to 3 years of existence so far. And I think God has been kind, the markets have been kind. We have a very good business to demonstrate. Energy transition, and again, sustainability in through social reforms, that is to empower farmers. So we get to do all of that, which is very, very exciting. So in terms of the company so far, we had only the first business vertical that was in operation, which is manufacturing of ethanol. And in the ethanol space, we had 5 ethanol plants. The fifth one just got recently commissioned. It got the consent to operate as recently as December. So with that, we are now operating a full 2,000 kiloliters per day capacity. And if you remember, in the last Q3, Q2 of this current financial year, we had taken a conscious shutdown of the plants to integrate 3 of our 5 ethanol plants into grain field or making it dual feed. Now our capacities are fully geared up to operate on a 300-day basis. That is the expectation. And coming forward, we have other verticals also that should give us a lot of growth momentum. But to your question, sir, on the how we end this quarter and how we end the financial year, um, times have been good for us. The prices of raw material, that is grains, has gone down drastically because of the oversupply of grains and underutilization of capacities across the country. So that is giving us a lot of margin expansion. And we are looking at a peak operating capacity right now and almost at a rated capacity into 80-85% of capacity use on 90 days is what we are projecting. So that is what exactly we should be achieving this quarter.
Got that, you, Ms. Nirani, and largely, very well explained as well that, in terms of dual feed, and I'll just come to that in just a bit. In terms of, where we've seen this year, in terms of the revenue profile of the company, you are roughly hovering around the 1100, 1200 crore mark, and last year you've done 1900 crores. Now, for quarter 4 in March 2025, you did about 900 crores in terms of revenue. So, should we expect that this year you should at least end at roughly around 22 to 2300 crores in terms of revenue? Would that be a fair estimate?
I would say our targets are a little higher than last year, and we are sort of on track to probably achieving that as on date. And we just left with another 30 odd days, and to be precise, 29 odd days, and we should be closing a little over the last year's last quarter mark.
Something that we will be working with, of course. And do you expect that now that all those plants have gotten commissioned, your 3 out of 5 plants have become dual feed as well? Do you see that we could see actually a margin surprise compared to last year, because you were roughly at around in the same time last year 17 to 18% margin in quarter 4 specifically? So could we see that quarter 4 could be a big jump, 25 to 30%, and hence you could see that margin growth for the year come back?
So two things. If you look at my last quarter, that is Q3's results, we only operated for about 58 odd days, close to 59 days, let's say. In that, we could achieve a good revenue growth as well as a margin of almost upwards of 15 to 16%. We had a lot of costs that we had to bear during the period, and a few of our capacities were also being commissioned. Now for Q4, all of them are done with, and our grain plants are also in operation as we speak. Especially on maize, the margins are much higher because we usually predicted maize price to be somewhere between 22,000 rupees a ton to 24,000 rupees a ton, whereas the market today stands somewhere around 18,000 rupees a ton. That's a huge delta which we never expected. That is going to demonstrate a big growth in the bottom line on the margin front. Uh, Without quoting a number of on what percentage of EBITDA we should be reaching, it should be somewhere on the uh, let's say about a historic EBITDA so far that we've achieved. That's all because of the price of raw material.
Got it. So definitely that 4,000 rupee delta will be a big factor to watch out for in quarter 4. I just wanted to come back to the business now, because we've spoken about financials a little earlier than I anticipated. But on terms of the business, now you spoke about the dual feed aspect. Now 3 out of 5 plants are already dual feed now, as you mentioned at the end of quarter 3. Talk to us about the benefit and what it actually means for our investors, because while TrueAlt, a recently listed company, we've not spoken to you too often. So if you can understand and help us understand the meaning of dual field and what it does for you in the future.
So typically, we earlier operated on a single feed, that is the derivatives of sugarcane, that is sugarcane juice, B heavy molasses, or C heavy molasses. So this is one family of raw material that we used to consume. Now we have added pre-fermentation. We've added a few equipments that allow us to consume rice or maize. So at any given time, I can consume sugarcane juice, B heavy molasses, C heavy molasses, or I can consume rice, maize, or any damaged food grains. So this makes it the family of grains and the family of sugarcane derivatives are considered dual in nature. So they're two different roadways to achieving ethanol, and we now can do both of them in three of our plants, three of our big plants.
And Mr. Nirani, in terms of the benefit, now you mentioned 3 out of the 5 plants can do the dual feed. So uninterrupted supply of raw material as well as some benefit of the volatility that you might have seen otherwise from just that single raw material, you get that benefit. And that's very well understood. What will it mean for the business in terms of financials? How could, if you can explain us that as well, because how the margins for all commodity businesses is very volatile. If you can give us some perspective of how we should look at that in terms of the benefit of dual field coming into margins.
Absolutely. So what we now have is the possibility to be, flexible in consuming any kind of grains. And the biggest opportunity in ethanol business right now in the current framework is that ethanol has different prices and they are fixed for the whole year. So our finished good, there is no dynamics on the cost. So I don't have any, to stock up inventory and sell later. There's no problems like those. Whereas the raw material has a huge dynamic. I mean, there's a huge delta in the prices. Usually during the harvest period, the prices of rice, maize, or sugarcane is quite low. And during non-harvest period, the prices go up. So, and each year, the if the rainfalls are very good, then we get good sugarcane and we get good rice. If the rain is less, we get a lot of maize. So every year the dynamics change, and by us being dual feed, we will have access to different kind of feedstock irrespective of rains or no rains, right? So that gives us the flexibility in terms of availability. Now, in terms of the pricing, each of these commodity has a different price structure during different months of the year. And for us to have that assessment and procure the right raw material at the right price is the skill that the operators will really have, because your cost of conversion is almost at a highest efficiency. Your finished good is at a fixed price. All that you're left with is your skill on procuring the raw material at the right price. So that's exactly what benefit that we get by being dual feed.
Got that view, and I appreciate you helping us understand that a lot easier as well. So I appreciate your understanding on that. But on compressed biogas, that's the next big opportunity, right? We've seen one of the leading players in terms of energy and the company with the largest market cap also opening a lot of CBG plants. If you can give us what is TrueAlt doing in that sense, and how far are we in terms of that coming into the revenue? So if you can give us some medium-term projection also, that could be fine. But what is the benefit of TrueAlt entering into this space? Because you have the benefit of the 5 ethanol plants, that's the steady state revenue. You are going into this new venture as well. So talk us through the rationale.
So CBG is the next big disruption that the government of India is fully geared to achieve. And TrueAlt wants to participate in that in a very big way. We have targets to invest close to upwards of about 1,200 to 1,400 plus crores in the next 2 years in the CBG space itself. And we have two joint ventures, one with Sumitomo Corporation and one with GAIL, Gas Authority of India. And both of the places where we've already commissioned the construction, four of our plants have now begun construction. Six of the GAIL plants will begin construction as early as maybe last week of March or first week of April. That's the target that both GAIL and us are holding to achieving it. Now, CBG is a phenomenal opportunity for, especially for TrueAlt. In our perspective, is that I have sugarcane press mud, which is absolute waste right now, and I've got spent wash, which is a byproduct of ethanol making. So both of these products give me a lot of flexibility on procuring or buying raw material, and that gives me the the flexibility to run the plant at a big scale because I have assured feedstock available. And CBG is a very interesting business because we are achieving, substitution of three major products that we import. One, India is a net importer of fertilizers. We import close to 70% of our fertilizers. Uh, Through the CBG business, our residual waste after extracting methane becomes a organic fertilizer, which we give to the farmers. And again, India imports close to 60% of its gas, and our per capita gas consumption is very, very low. So consuming these organic waste and converting it into CBG and into fertilizers is a very, very important subject for government of India, and Trualt is participating it in a big way.
Got it. So there is, multiples to this step. So from organic waste, you will be going, of course, into manufacturing CBG, and from there also you can use that residue going into fertilizers. Got that point. How quickly is your timeline of those 6 plants with GAIL as well as the other joint venture as well? So if you can give us some perspective of when is it expected to operationalize, and also in terms of what it does for return ratios, because there will be some hit on the return ratios at the start, but your ethanol plants have also given that benefit and will give that benefit in FY27. So how should investors look at both these aspects?
So on the CBG, good thing for us is that we have been operating CBG since almost 4, 5 years now, and we're one of the early movers. And if you look at our compressed biogases financial, the performance in the last 3 quarters, we've been achieving an EBITDA of upwards of 60%. And we've been achieving a PAT of close to 45 to 50%, which is a huge thing, which I would only presume that very few or very limited sectors can actually give. So we had this the benefit of early understanding on the project. A lot of the companies that are doing CBG, including the one large company probably that you referred, they're still in the learning curve, and we are now replicating the learning that we had in our first plant. So in terms of numbers, we have got 4 plants of 20 TPDs each. That could give us a revenue of somewhere close to about 300 to 350 crores at full capacity on an annualized basis, which will commission by July of this year, that is 2026. So Q2 of this year, we will start seeing some revenues from the 4 plants. These are under a joint venture with Sumitomo Corporation. And the ones with GAIL, these are 6 in number, and we're spending close to 470 odd crores of capex on those plants, and target to achieve somewhere about 400 crores of revenue on an annualized basis. But those will be commissioned only by the Q3 of next financial year or November of 2026. So we'll have at least about 10 plants that will be commissioned, hopefully within this calendar year. That's the target that we carry. And one good thing here, sir, is that this whole business, the revenue or the capacity utilization or ROE, ROC entirely depends on your skill to sell, because gas can't be stored. If you're unable to sell it, then you'll have to flare it, which is a revenue loss. So because we've got good partners like GAIL, who is who's the principal of all kinds of gas trade in India, they have assured us the offtake guarantees. So that gives us confidence that we will be able to achieve capacity utilization from year one itself.
Got it. So very important point that you talk about, Mr. Nirani, that you have that benefit of GAIL being as a partner. But just very quickly, dissecting what you told me, 300 crores of revenue at full capacity from the Sumitomo plant that will start in July of 2026. So could we anticipate at least 200 crores revenues in FY27 from this plant? Would that be a safe assessment?
So we wouldn't have that high of an expectation, but since it's year one,
Yeah.
we usually plan to have target to achieve at least about 50% on the remainder days of operation. So 50% of, let's say, by July, if we commission, we'll have about 270 to 80 days in hand, the number of operational days. On that basis, we would have somewhere about, we should target somewhere about 120 to 140 crores of revenue. That's the target that we would carry.
And when I look at the medium-term opportunity as well, Mr. Nirani, and that probably would be my final question, you've seen a very big jump in revenue from FY23 going into 25, where almost 900 crores. Now, largely a lot of that is coming from ethanol. So when I look at the medium-term opportunity for FY28, would it be safe to say that you will be clocking in at least double of the current revenue that you're doing, or at least a close figure, and margins would subsequently be at least at the level that we've seen historically at the FY25 level, given that you will have a couple of years, 3 years. So by FY28, you anticipate roughly around 4,000 crores of revenue and margins of at least 25%. Would that be a fair assessment?
If you ask the entrepreneur in me, I am really doing this, I would tell you that we've been literally growing at a 55% growth rate since 2023, since our first year of operation. And from 723 crores in revenue to we grew to 1,240 crores in revenue the second year. Then we grew to almost 1970 crores in revenue the third year. So this year also we would actually in line to achieving that kind of a revenue growth, say 55% of revenue growth. But unfortunately, in the state of Karnataka, we had excessive rainfall during this monsoons, pre-monsoon, post-monsoon, and monsoon were quite heavy. So our construction time on the grain integration, it got delayed by close to 2.5 months. And a month I can achieve almost about 5.5 crore liters of ethanol. And that 2.5 month would translate into almost 12 crore liters of ethanol. So that disruption slowed down the growth for this financial year, but it was again a very conscious decision that we took, and again it was a one-time delay that had happened. We are sure that the growth rate should be in tangent to what we have achieved in the last 3 years. That is the
Right.
target we hold.
Uh-huh.
And all these, the new revenue growth, or rather the business growth, will come in from three verticals in principle, rather four verticals.
Right.
One is capacity utilization in ethanol. Two is the new CBG businesses that are coming up, almost 22 CBG plants, 23 CBG plants in the next 2 years.
Right.
And we'll have SAF giving us revenue starting FY28.
Right.
And right now, we also have the fuel retail verticals. In fact, we are one of the, we got authorized as to be called as an oil marketing company.